our trading hour by focusing on the primary market. 860 crore rupee IPO of Crizac has hit the street today and will close on July 4th. The company is a B2B education platform for agents and global higher education institutions. Following the IPO, the promoter share in the company is expected to reduce to 60.42% from the existing 8.48%. To discuss more on this, Vikash Agarwal, the CMD of Crizac, and Christopher Nagle, the CEO of Crizac UK, join us now to take the conversation forward. Gentlemen, good morning. Thank you so much for joining in. Vikas, let me come to you first up. For the benefit of our viewers, can you simply explain what your revenue model is, who are your clients, and what does the business entail?
Sure. As a company, we connect various counselors and agents across the globe via our platform to universities in various destination countries like UK, USA, Ireland, New Zealand. These counselors get students, they counsel the students, help them select the universities and courses where they want to apply. These agents will then put the application to our platform. We coordinate with universities and get them the offer, which in turn pass it to the agent who help the students to apply for the visa. So we are a link between, let's say, agent and the university.
Okay, so your clients are majorly the universities across the globe.
Yes.
And which is the biggest geography for you, Vikas?
At the moment, from a source perspective, India would be our biggest geography, where we have 60% of our students coming from. And in terms of destination market, UK would be our biggest destination market, where 90% of our students would go to.
Gentlemen, good morning. Thank you for joining in. To Vikas, before I get to Christopher, you know, your issue is a complete offer for sale, which means that you would not be receiving any proceeds from this. So with no proceeds coming in from the IPO process, how do you plan on funding your potential expansion plans, and are there expansion plans that are lined up for you?
Sure. The company at the moment is sitting with 400 CR plus cash in the books. So company does not need any additional capital for expansion. It's a very asset-light model. And we decided to go for IPO because it will bring trust and visibility. In terms of expansion and future plans are concerned, company has sufficient cash to do that.
Okay. Christopher, let us get you in the conversation as well. This is the basic platform which connects agents with universities, is what Vikas explained to us. What about value-added services? Is that something that you will be looking at expanding into, be it student loans, forex, visa, accommodation support? If yes, how much is it as a percentage of revenues currently? If not, how do you plan to scale it?
Nice to see everybody today. It's true that at the moment, our major source of revenue is our services to universities. We have plans to add on other services in future. Some of those you mentioned just now, like student loans, accommodation, or forex services, which all students need. Our plan is not to, manufacture these products ourselves, but to distribute them from other suppliers. Because we are a platform, currently, we help students gain admission to universities, but there's no reason that our same platform can't be used to distribute these other services as well. These are not currently in our revenue, but we hope that we'll be able to roll them out very soon.
How soon would that be? Any timeline? And if yes, would that require additional investment? Just trying to understand the future course of the business.
So we're hoping it'll be in the coming year that we'll add these services on and they'll start to, contribute to our business. And because we are a platform business, there's negligible capital investment required to add additional products and distribute them through our platform.
Two-part question, Vikas. You mentioned most of your revenue also comes from the UK geography, almost 95% of it. What steps are you taking to diversify your geographic base to reduce this revenue concentration worry? And part two of my question is, since you have close to around about 4,000 agents in around 40 countries, what are the steps that you're taking to expand into other areas, be it the likes of Latin America, other parts of Asia, excluding India, of course, and say for the likes of Africa?
In terms of bringing down the risk, as you said, 95% of our business is for UK. We are looking at expanding into different destination countries, which is USA, Ireland, and Dubai to start with. We're also looking at expanding into Australia if possible. At the same time, we are expanding into various source market, again, which would help us diversify and de-risk the business. As of today, we receive application from almost 75 different nationalities. So that would help, even if one particular corridor, say for example, India, Canada, last year got choked or had diplomatic issues, expanding into a different source market would kind of eliminate those risks. To answer to your next question, yes, the company has a desire to expand into new geographies for source market. For example, Southeast Asia, where we have a negligible presence, we would like to expand into that one possibly in a year or year and a half. Likewise, you rightly said Latin America again is a good source market, especially for US and Canada, and would love to expand into those ones as well.
Okay, because while we're talking about expansion, let's quickly take a look at the financials as well. While revenues have grown well, even profits have grown well. However, margins have been quite volatile for you. You've seen 25% margins in FY25, that was 13.5% in FY24 and 38% in FY23. What explains this volatility? And while you're talking about expansion into markets like the US, the policies that are coming by the government as well, do you think it'll be difficult to penetrate such markets?
Sure. With reference to variation in volatility of margin, our margins was stable last year as well. It's just that last year we had a extraordinary expense of acquisition and termination fees, which had showed a dip. But if you look at the absolute number, it was same in line with roughly 25%. We expect almost plus minus similar range in future as well as the business goes. With reference to your questions to US, yes, there is a bit of a turbulence at the moment, but our US base is quite small. US is by and large the biggest destination, not only for Indians, but across the globe. So we still believe that irrespective of these headwinds and news, US will still continue to grow decent numbers.
But in case there are any adverse student-related policies that come out from there, Vikash, because there is a lot of policy uncertainty over there, whether we like it or not. It's a fact. And if there is a case of any adverse policies, and you mentioned US is a very large market, but since it's a very small size of your product base, would you look to diversify or pivot from there and move on to other geographies? And since I'm getting into this, your top three, dependence on your top three global institutions has come down from almost 63 to 53. Does that number come down further as well?
Yeah, you're right. Just to move out of US as well, though we expect to grow in US, Dubai, for example, is offering a golden visa to students. So they are welcoming students. And the best part is, if you had gone to the news of late, India itself is becoming a big destination market. Last month, government of Maharashtra signed up 6 or 7 tie-up with foreign institutions to set up campus outside Navi Mumbai. There's already 2 or 3 running in GIFT City in Gujarat. There are a few coming up in Delhi, NCR. So India itself will become a big destination market. Since we have a very big network of agents in Africa, South Asia, we believe we will be able to contribute and bring students from those countries to India. And that would also help us kind of de-risk the company from any kind of volatility in terms of policies.
Okay. Vikas, a lot more questions, but I think you'll be able to answer a lot more of them after listing itself. So thank you so much for joining in today with all those details, explaining the business to us, the future plans, and what kind of new areas you're looking at in terms of new business prospects as well. Thank you so much, Vikas and Christopher, for joining us today and answering all those questions. With that, we'll do one thing. We'll slip into a break. When we come